Hello, good morning. Good morning, everyone. I hope you had a wonderful and beautiful weekend. And I hope we are all pumped up for in preparation of the New York session today, too. Okay, so let's get this started. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section, as this will give me a positive feedback that we are good to go this morning. And let me know if the sound is clippy so that I can make the appropriate adjustment to make the audio quality better. Okay, so I would like to see some comments. I would like to see some feedback. What do we have in the comment section? Okay, Valeric, good morning. Thank you very much. Okay, Kind Overn, good morning to you. Glad to have you around. Mark dear, good morning to you. Roslan 222A7, how are you doing today? Good morning. Hey Carrie, how are you doing this morning? Good morning to you. Thank you very much for being around. And I do hope you had a wonderful weekend. All right, so with this couple of comments here, I would I see you, Carrie. I'll see this as a confirmation that we are good to go this morning. And on this note, I'm welcoming you all to another promising session on the X Trend Speed Live as we get ourselves prepared for the new week. In the next couple of hours, I will be taking you through the financial market, as we are going to be dissecting the current market structure to decipher and reveal potential trading opportunity lining up for us for today and for this week. My name is Sharif Daramola. I will be your host. And for those who are joining us for the first time, you're highly welcome on board here. I'm so glad to have you guys around. It's always joyful to see newcomers in the house. So for newcomers, what we simply do here is to gather here on a daily basis to review the financial market. So on Mondays like this, we normally choose random pairs, and it is a very, very beautiful opportunity for you to submit any instrument you want us to look at. So Mondays like this, we take in suggestions from you. Suggest any financial instrument you want us to look at, and we shall incorporate it into our plans, and this instrument will be the pairs that we are going to be monitoring for the week. And at first it might look a little bit overwhelming, but I assure you that with time you get to understand how this works. Just stay tuned in, be with us, continue to be part of the session. It happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And you'll get to understand how this works, and you will be able to use the information gathered here to make your individual and personal decision on whatever instrument you are taking on. I see a comment from Susie MB. They have removed the raffles. Okay, all right. Are you talking about the sound quality, or what are you talking about there, Susie MB? I would like to get a positive feedback in that regard. All right, on that note, let's dive right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamentals, as we want to have see if we do have any macroeconomic event that we are going to be looking forward to. So what this macroeconomic event does to us is that it helps us to position ourselves in such a way that we can be part of any potential move when it finally happens. So going into the economic calendar, we shall be focusing on high impact events that will be affecting the pairs and instruments that we have chosen for the week. And majorly, we are going to be looking at high impact events affecting the US dollar, the Japanese yen, and the pound sterling too as well. And for today, Monday, April 24, we do not have any high impact event to look forward to. But I was able to readjust my filter to include the medium impact event so that we can actually see what majority in the market will be looking forward to today to decide what our next line of action will be. And what I was able to come up with is the Chicago Fed National Activity Index, which is coming up in about an hour, 30 minutes from now. This index is released by the Federal Reserve Bank of Chicago, and it is a monthly index designed to gauge overall economic activities and related inflationary pressure in the US economy. So this is another event that majority will want to be looking at for today to give a little glimpse into the health situation of the US economy. And the previous data came in at minus 0.19, and we have economics projecting a minus 0.02, which is on the positive side. So let's see how the actual data will come in. Will it come in as expected, below expectation, or beyond expectation? So this is one of the events we are going to be looking forward to for today. So outside that, we do not have any other event. So with that being said, here let's dive right into the chart. And as usual, the first commodity we are going to be taking this morning is the US oil. And the first thing we want to be doing is to take an holistic view of what is really going on in this market, at least on the higher time frame. And I'm so excited to let you know that the US oil was one of the most profitable trade for us last week, as we rode the move all the way from that $82 mark here into that $78 area to give us over 600 pips minimum on that one. And we were able to also had multiple entries. If you remember, we had multiple entries to the positions we had last week. Hold on a second, I'm trying to make some readjustment. Okay, so that gave us this move that we had here. But before we go into this current structure here, let's look at what has really been happening in this market, at least in the last 7-8 months. And one obvious thing you would realize that price action has been a little bit on the bearish side. And when we connect the series of lower highs here, we have this beautiful bearish trend line which has consistently been respected over this period of time. However, when we zoom into the situation here, since the month of November, we saw our price action was trapped within a channel. So we had the resistant level of that channel around the $82 mark area, and then we also have the support line of that channel at the $70 area. As you can see our price action had consistently respected that area. However, a couple of weeks ago, I think at the beginning of this month, we received that news from the OPEC Plus meeting, where it was decided that members pledging to cut oil production, and this led into a very bullish traction in the market. That was at the beginning of this month, where we saw these huge 40 pips gaps, bringing price into that area around the $80 level and this $82 level, as you can see here. And in the last couple of weeks, 2-3 weeks now, we have seen a situation where price has been trapped within this channel here. And what makes this whole structure very interesting is the fact that it shares a confluence with that bearish trend line that has been supporting the bearish momentum for the last 7 to 8 months. And at a point in time, we considered the breakout of that $82 mark, but as you can see what happened last week, price dropped back below the $82 level, and it was at this point that price action is back into the seller's territory. Now, the question at this point as we head into the new week is that the bearish momentum we witnessed last week, is it going to turn out to be a retracement of this impulsive move that started last month, where we want to see how far this retracement phase will go before another wave of bullish momentum will happen? Or will this turn out to be a situation where price would transition into a sell-off, causing a crash in this market. So these are the things we are going to be looking at from a technical standpoint when we scale down to a much more lower time frame. But before we scale down into the lower time frame, I also want to acknowledge this structure here, this bullish trend line, which was at one point in time supporting the bullish momentum before the breakout of that structure happened last week. Sorry, at the end of last month. And there is a chance that price could still drop into the structure before this bullish momentum will happen. So one thing I did here to make things a little bit easy for us to spot any potential opportunity this week is to identify a key level which we shall be using to guide our trading activity for this week. And the key level was spotted at the $78 level, and if you go to as far back as November last year, you will see how that level has been a major determinant of price action. At one point in time, it had been buy pressure, selling pressure at one point in time. Now, if you look at what happened last week, we saw our price action closed around that $78 area. So going into the new week, if price action climbs above the $78 level, and we start seeing buy pressure above the structure on our lower time frame, we would have no choice than to look out for buying opportunity. But if price action continue to trade below the $78 level, it might be a sign that sellers might come in, but we still need some further confirmation to give us that bearish move, as we could have a situation where price could transition into a choppy situation before the breakdown of the $76 level happens, which also shares a confluence with that trend line to give a bearish move. So in this situation we have here right now, and with the information we have gathered on the daily time frame, I would like us to scale down to the 1 hour time frame. I think a much more lower time frame, let's say the 4 hours time frame first of all, to see how price action will be reacting to the structure, which will give us a clue into what to look out for. So scaling down into the 4 hours time frame, this is what we were able to see on the 4 hours time frame, and I was able to identify a simple setup here after taking into consideration what has been happening in this market since the beginning of this month. And if you remember, at the beginning of the month we had this very bullish gap here following the OPEC Plus decision to cut oil production. The market reacted very bullish in that regard, and since price action climbed above that $79.50 level, we have witnessed the situation where price was trapped within the structure, and last week we saw the breakdown of the support line of that $79.50 level. And if we are looking at this from a technical standpoint, whenever price action breaks down a key structure like this, we expect that one point in time price may likely come back to do a retest of that structure to incite another wave of bearish momentum to the downside. And if we look at what has been happening in this market last week, you will see this as soon as price got into that $77 area, we begin to see some buy traction resume around that area, giving us a clue that every attempt by the sellers to continue that trend that started last week has been met with strong resistance from the buyers. And with this whole situation here, it led into this consolidation phase, which emphasized the indecision in this market. And you all know, whenever we have this kind of indecision, we have no other choice than to remain patient and wait for a signal in the form of either a breakout of that channel to give us a buy opportunity, or a breakdown of the channel for selling opportunity. And don't forget that we have our key level here, which we identified on the daily time frame as the $78 mark. And one thing about the key level on the 4 hours time frame here is that it's serving as the neckline of a possible and potential reversal pattern. As you can see here, the continued rejection of that area between the $77 level and the $77.69 area is likely has a tendency of price action transitioning into a reversal pattern in the form of a double bottom structure. And you all know, whenever we spot a potential reversal pattern like this, the next thing we want to be doing is to identify a neckline which shall be serving as a platform upon which we are going to be buying, and at the same time the breakout of that neckline area will confirm the validity of this potential reversal pattern that we just identified. And considering the fact that this level is a key level that we want to be using, we want to see price action break out of that structure for buying opportunity for this week. And if you look at the structure closely, you will notice that the breakout of that neckline also shares a confluence with the resistant line of that descending channel we identified here. So let me zoom out and let you see what descending channel looks like. So this is the descending channel. This is where price action started last week, and the resistant line of the descending channel is this. And look at how the key level also shares a beautiful confluence with that trend line. So a breakout of both the $78 level and the trend line will be a signal that we might be going bullish at this point. So let's scale down to a much more lower time frame. Let's see how the participants in this market has been reacting to the structure since the beginning of this week. And in order to do this, we want to be looking at the 1 hour time frame where we begin to see things more clearly. So I will be zooming right into the current structure right now, and this is what I was able to spot here at the beginning of the week. Now the week started on a bearish note. As you see here, price action started at the $77.65 level, and we saw the bearish move to the downside where price action started finding buy pressure around the $77.69 level. And if you look at the structure here, we saw on Friday last week, we saw how that level also was a buying niche for participants in this market. And as soon as price got into the structure a couple of hours ago, we also saw buy pressure resume from that area. And this is why we have a support line here. So at this point in time, this is the lowest point price action has ever been for this week, making it our support line for the week. And we also have the highest point price action has ever been at the $77.65 level. And you all know what we look out for whenever we have this kind of simple flat channel. We want to remain patient, waiting for price action to either break out of the channel to the upside to give us buying opportunity, or break down the channel to the downside to give us selling opportunity. And so with this sale situation here, we want to be having a buy stop order above this resistant line so that we can catch that buy opportunity, and a sell stop order below the structure to join a bearish move. And judging from this whole situation we have here, and considering how price action has been reacting to the zone since Friday last week, I'm of the opinion that price action has a high chance of transitioning into a double bottom structure that might lead to the breakout of that neckline at the $78 area to incite that bullish move to the upside. Now we also have the neckline area here where I want us to be having a buy stop order too as well, so that we can add more position, hereby maximizing the bullish potential in this market. Now there is one caveat to this whole structure. If the bullish momentum continues to the upside in such a way that price action gets into that $79.50 level, we want to be moving our stop loss. Obviously we are going to be moving our stop loss accordingly, as this is a counter trend opportunity, and buying a position within a strong bearish wave needs a little bit more of attention. So if price action continues in our favor to the upside, we move our stop loss accordingly, and most importantly, as soon as price gets into the $79.50 level, and we want to be locking in our profit to see how price action will react to that structure, and this will decide if we are going to be adding more buy position to our existing trade or getting ready to sell. And the reason why I have said that the $79.50 level is an area we want to focus on as soon as price gets into that structure is quite simple. Now, if we look at what has happened in this market since the beginning of the month, remember we had a support line at that $79.50 level, which has been a very strong buying niche in this market until last week's trading session, when we saw that breakdown of that structure. And you all know from a technical standpoint that whenever price action breaks down a key structure like this, there is a high chance that price will still come back to do a retest of that structure to incite another wave of bearish momentum to the downside. So because of this technical expectation based on this current market structure, we want to wait and see how price action will react to this level, which will now decide if we are going to be buying, adding more buy position to our existing trade, or getting ready to sell. Now, for us to sell at that point, definitely we want to be seeing selling pressure resume below the structure on our lower time frame, where buyers are finding it difficult to climb above that $79.50 level. So if we have reversal patterns around that area, then breakdown retest of structure will definitely incite a bearish move. But if price action breaks out of that structure, then at this point price action would have climbed back above that bullish trend line, which has been supporting that bullish momentum since last month. So if price climbs above the $79.50 level, as you can see here, and we start seeing buy pressure resume above the structure, we want to be in for another wave of bullish momentum to the upside. So this is what we shall be looking at on the US oil for today. So I'm of the opinion that we are going bullish based on this current structure, as we can see here how sellers have found it difficult to break down that $77 area, at least since the later part of last week's trading session. So in as much as we are holding on to a bullish bias at this point, you all know how we do it here. We always ensure that we also keep tabs with the opposite direction. So what this simply means is that even though we are looking out for buying opportunity, we should also consider the potentials of sellers too as well. As we all know, this is a very strong bearish momentum, which we took advantage of last week, and it could still lead to some selling pressure at this point. But based on this current market structure, for us to be selling the US oil, what do we want to see on this chart that will give us a signal, the confidence and leverage to be part of the bearish move? So what I want to see here, I would rather see price action break down that support line, that support zone, that demand zone, which is between the $77 level and the $77.69 area, and then I look out for confirmation to happen. Remember, we are not jumping right away into that move when price action breaks down that structure, as it could turn out to be a false breakdown. What we want to wait for is a retest of structure to confirm that sellers are gradually gaining that momentum to continue that trend to the downside. So as soon as the breakdown of the structure happen, we want to scale down to our lower time frame, let's say the 5, 10 or 15 minutes time frame, to look out for retest of structure. It could be the retest of the $77.69 level, or the retest of the $77 area, where selling pressure resumes, giving us signs that buyers are finding it difficult to climb back above that $77 area. Then we look out for selling opportunities to join that decline to the downside. And one interesting thing about the $77 area is the fact that it shares a confluence with the bearish trend line, that is the resistant line of that descending channel that started last week. So these are the scenarios we are going to be looking out to sell. At this point in time, I'm holding on to a bullish bias. I believe that buying potential is very strong at this point, considering the buy pressure we have been witnessing around the zone between the $77 and the $77.69 area. So this is what we are looking out for. Looking out for buying opportunities. Let's be on standby to catch that move. And if the opposite happens and a breakdown of the structure happens, then we look out for selling pressure to confirm that sellers are strong at this point. So this is what we shall be looking at on the US oil for today. If you have any questions, let me know in the comment section, and trust me, I am willing to be of help. I can see some comments here. I see 876. Good morning to you. Trust you are doing well. And how are you doing, Haint? I hope I pronounced your name correctly. 587. Good morning to you. Gertrude, how are you doing today? Good morning. Okay. So in the absence of no questions, I want to assume that we're on the same page and I'm good to move on to the next option. So as usual, the next option we are going to be taking this morning is the US tech. And the first thing we want to be doing is to scale up into the daily time frame and let's see what is really going on in this market. So our center of focus for today will be what has been happening since the beginning of this year. And it is quite obvious that since the year began, we have a situation here that emphasizes the strength of the buyers in this market. And this is more evident after connecting the series of higher lows, as you can see here, which gave us the support line of that ascending channel. And when we connect the series of higher highs as well, we have the resistant line of that ascending channel. However, things got a little bit interesting at the beginning of this month when we saw the breakout of the 12,800. This level has been a very strong selling niche in this market, which lasted for about 5 months. Look at what happened since the month of August last year when price action broke down the 12,800. We also saw here in the month of February where as soon as buyers got into that structure, we saw selling pressure negating all bullish attempts in this market, pushing price further to the downside. And at this point, we saw this level as a very strong selling niche. However, something surprisingly happened at the beginning of this month, and that was that significant breakout of that structure at the beginning of this month. And since the breakout of that structure here, we have seen a situation where price has been trapped within a channel just right above the 12,800. So we have this whole consolidation phase where price is currently ranging between the 13,220 and the 12,800 level since the beginning of this month to further emphasize the indecision in this market. And with this whole situation here, it is quite clear that majority are very indecisive, as we are not sure where price action will be going from this particular point in time. But one thing for sure is that whenever we have this kind of simple setup, you know what we look out for. We want to remain patient to look out for price to either break out of the resistant line to give us a bullish signal, or breakdown of the support line of that channel to give us a bearish signal. And if we consider the impulsive move that got us to this point, it's looking a little bit more bullish at this point as price action caught within this channel, and we could see a situation where this whole structure could transition into a trend continuation pattern, which will only be valid when the breakout of that resistant line happens. So that is how we are going to be looking out for buying opportunity from a long-term perspective. However, if we look at this impulsive move here, it is quite you would agree with me that a retracement phase is long overdue, considering the fact that those who took advantage of this bullish opportunity at a very low price, let's say below the $12,000 mark, will at one point in time want to be doing some profit-taking activity, which will reflect on the chart as a retracement of that impulsive move, where price action could start another wave of bullish momentum. But this retracement phase cannot be confirmed unless we have a breakdown of the 12,800. Now, with the situation we have now, we have a choppy situation where there is an indecision in this market right now, and coupled with the fact that there is, from a fundamental perspective, that there is this speculation in the market that the US Central Bank will be doing a rate hike of 25 basis points on the 3rd of May. There's a lot of indecision in this market, and there is a likelihood that price could be going to the downside on this one, as the dollar will be favored if a rate hike happens. So at this point, what we want to do now is to scale down to a much more lower time frame so that we can see how participants in this market has been reacting to this current structure to decide what our next line of action will be. And when we scale down to the 1 hour time frame, I was able to spot a simple setup here after looking at how participants in this market has been reacting to the structure since the early hours of today. But before we go into how majority has been reacting, I want us to look at the 4 hours time frame where we get to see things more clearly based on this current structure. So it has been very bullish, and since the breakout of the 12,800, we have this old choppy situation continue. And at this point in time, you would realize that since the mid-month of March, price action has been respecting this bullish trend line. And in the last 1 week in this market, you will see how price action has remained around that bullish trend line, just right below that key level at the $13,000 mark. And at this point, I always mention here that whenever we are around a trend line, we need to be very, very careful, as anything could actually happen. Price could go to the upside from this point, respecting that trend line one more time to incite a bullish momentum. And there is also the possibility that sellers could break down that structure, giving us a sign that the trend line may no longer have the capacity to hold on to that bullish momentum. And at this case, we would see a sell-off in this market. But with the look of things right now, price action is currently trading just right below the trend line. And the question right now is, will sellers continue that momentum since price is trading below the trend line? Or is this going to turn out to be a false breakdown where buyers will continue breaking out of the $13,000 mark, which is our key level for this week, to incite another wave to the upside? So in order to decipher what is really happening here, we would need to scale down and see how participants in this market has been reacting below that $13,000 level and the bullish trend line. Now, when we scale down to the 1 hour time frame and monitored how majority have been reacting to the structure, this was what I was able to come up with. Now, look at the structure here. The week has started on a bearish note, as you can see here. The 12,985 happens to be the highest point price action had been for this week, and we saw the bearish move to the downside. And as soon as we got into the 12,930, we saw some bullish traction here. And with the nature of this candle, you would agree with me, there is a very strong bullish momentum around that area, and this had led into this engulfing bullish candle, which further emphasizes the strength of the buyers at this particular point in time. Now, with this whole situation we have here, hold on a second. Hold on a second, please. I'm sorry about that breaking transmission. I had a network trip and I had to switch my router so that I can get some connection back. So sorry about that. So where were we before the breaking transmission? So we were talking about the US tech, and we were trying to decipher how participants in this market has been reacting to the structure, especially when price is just right below both the key level had a $13,000 mark and the bullish trend line that we identified on the 4 hours time frame. And what we saw here was a situation where price is currently trading within this 12,985 and the 12,930 since the early hours of today. And you all know what we look out for whenever we have this kind of simple setup. We want to remain patient, waiting for price action to either break out of this channel to the upside to give us a buy opportunity or break down the channel to the downside for selling opportunity. But if we look at the structure closely and considering what has been happening in this market since the later part of the previous week, I'm of the opinion that a bullish momentum is looking very promising at this point. And the reason why I've suggested this is because of, if you look at what has been happening around that 12,950 and the 12,900 area, you will see that this level is characterized with buying pressure. And look at what happened a couple of hours ago as soon as price got into that support line at the 12,930. We saw how that level has been a very strong buying niche. And with the nature of that, those candles there, you can see we have like 1, 2, 3 hammer candles before this engulfing bullish candle further emphasize the strength of the buyers at this point. So I'm of the opinion that we might be going bullish for at least the first half of this week. So as a result of this, a buy stop order above the 12,985 should trigger our first buy position for the week, and we hope that price action will continue to the upside. Now, we also have the key level at the $13,000 mark, where a breakout retest of that structure also will be giving us the privilege to add more position to our existing trade. However, I would like us to take note of the structure here at the $13,035 mark here, which is one area I want us to take note of. Let's label it for the sake of clarity. So $13,035 level. So I'll place this at the top right hand side of our screen for the sake of clarity. So here we go. And one thing about this structure is the fact that it shares a confluence with that bullish trend line we identified on the 4 hours time frame. So as soon as price gets into the structure, what we want to be doing is to ensure that all our stop losses are moved accordingly, lock in some profit while we wait out and see how price action will be reacting to that structure to now decide if we are going to be going bullish or bearish in this market. So a breakout of that structure definitely will be giving us more opportunity to add more position to our existing trade. But if it so happens that price action getting to that point and we begin to see sell pressure where price action finds it difficult to find higher highs at this point, then a reversal pattern here will suggest that price action is likely going to be going bearish. So we want to be anticipating that at that point. So this area here is a very critical confluence where we want to remain patient to see how price action react to that level before making any informed decision. So in as much as we're looking out for buying opportunity in this market, we are also going to be taking into consideration the potentials of the sellers too as well. And if we look at what happened last week, though we had a huge chopper situation, it was more of a bearish tone. The chopper situation we saw here was tending towards the downside. Now, for us to sell the US tech for today, or at least for the first half of this week, I would rather see price action break down to 12,930 to give me that opportunity to sell this market. Remember, this area has been a strong buying niche in the market, and what we saw here 4 or 5 hours ago was a sign that buyers are still very strong around this area. So we would need price action to take out all the buy positions here to give us a confirmation that sellers are gradually gaining that momentum, which will confirm that we are good to sell this market at this point. So this is how we are going to be trading the US tech for today. If you have any questions, let me know in the comment section, and trust me, I am willing to be of help in that regard. So moving on right now, we shall be going into the GBPUSD, and on the GBPUSD, we shall be going into the daily time frame to quickly run through what it really looks like and what has been happening in this market, at least in the last 6-7 months. Now, judging from the current structure here and looking at what has been happening in this market since the month of September, you would agree with me that it has been more of a bullish momentum. And to further emphasize the strength of the buyers, we connected a series of higher lows, don't mind my wobble line, and we had this beautiful trend line to confirm the strength of the buyers. However, in the month of November, as soon as price broke above the 1.18 and tested the 1.24550 area, we saw how sellers came in to negate all attempt by the buyers to break out of that structure. So I will zoom into this current structure, as this is where our center of focus will be. And look at what has been happening around this area since the month of December. We saw that at every point in time when price gets into the structure, we saw how sellers come in immediately to push price to the downside. This went on for about 4 to 5 months, and not until the beginning of this month we saw the breakout of the structure here. Though we had a couple of breakouts this month, but you can see that the bullish traction wasn't that strong. As you can see, at every point in time we had the breakout of that level, we saw how sellers come in again to push price back into the territory of the bearish zone here. Now, since the beginning of this month, we had this whole situation happen just right around that resistant line, giving us a flat channel between the 1.2550 level and the 1.23700 area. So this is the highest point price action has ever been this year. That is the 1.2550 level. So that is our resistant point for that channel. And then we have this support line of the channel sitting at the 1.23700 area. So we have a flat channel here. And one interesting thing about this whole structure, if we consider the impulsive move that got us to this point, is that this whole structure has a high chance of transitioning into a trend continuation pattern. For example, it could turn out to be a bullish rectangular pattern or a flag pattern, where a breakout of the 1.2550 level will welcome a very strong bullish move to the upside. And at the same time, this whole structure as well could transition into a reversal pattern, where a breakdown of the 1.23700 level, which happens to be the support line of this flat channel, could incite a retracement to the downside. So these are the things we are going to be looking at here. And looking at what has been happening in this market since last week, we saw how the 1.24550 level has been a very strong selling niche, as buyers has been trying to break out of that structure, in fact throughout of last week, hereby giving us a choppy situation on the GBPUSD. Now, in order to have a better understanding into what is happening here, I was able to identify a simple setup on the 4 hours time frame, which I want us to be using to guide our trading activity for today. And this is what I was able to pull out from the 4 hours time frame. After acknowledging that choppy situation last week, we had this whole situation figured out, where price action has been trading between the 1.24550 level and the 1.23600 area. Now we have a demand zone at the 1.23600 area after considering what happened around this juncture in the market last week. And in fact, till the last trading day of last week, we saw how that level had negated all sellers' attempts in this market. So for this week, we have our key level at the 1.24550 level, which after the breakdown happened, we saw how sellers had continued to negate all bullish attempts in this market. But with the situation of things right here, where price action is trading above a very, very solid demand zone, we would have no choice than to look out for buying opportunities in this market. And this will only happen if price action breaks out of that resistant line here at the 1.24550 level, which also happens to be the key level for this week. So what we are going to be doing now is to scale down to a much more lower time frame, like the 1 hour time frame, where we want to see how participants in this market has been reacting to our key level at the 1.24550 level to now make a decision for today. Now, when we scale down to the 1 hour time frame, this is what we were able to identify here. So you can see a situation where price has been choppy since the beginning of the week. Though it has been bearish, we had the sell pressure resume this week, bringing price back into the 1.24100 level. Buy pressure resumes, giving us a very beautiful flat channel. And you all know what we look out for whenever we have this kind of flat channel. We want to see price action either break out of the support of the resistance line to give us a buying opportunity, or the breakdown of the support line to give us selling opportunity. And with this whole situation, in order to be able to catch this move, we want to be having our buy stop order above the 1.24550 level so that we can be part of that bullish move. And then we look out for selling opportunity if price action breaks down the 1.24100 area. But if you ask me from my own point of view, I'm of the opinion that it is looking more bullish at this point. If we consider what has been happening since last week's trading session, that is Monday of last week, you will see that this was the lowest point price action was at the 1.236, and since then price action has been finding higher lows, giving us a sign that sellers are unable to find a new low in this market. And for me at this point, this is more or less a sign that buyers are very strong at this point. And the continued knocking of the ceiling, I'm very sure at one point when the pressure gets too much, the ceiling is going to be broken to the upside, and I'm of the opinion that when a breakout happens, the move is going to be very, very massive. So we want to be part of this move when it breaks out, so we have a buy stop order above the 1.24550 level so that we can be part of that move to the upside. Now, what happens if price action does not climb up instead and continue to find lower lows in this market? Are we going to be selling right away as soon as the breakdown of the 1.24100 level happens? No, we are not going to be doing that, as we still need some confirmation to happen. And the reason why I said we are not going to be having a sell stop order below the support line here is simply because of that huge demand zone that we have at the 1.23600 level. But if you are a scalper and you're a short-term trader, you might want to take advantage of that move right away, which will be giving you about 50-60 pips thereabout, which is not something I'm looking forward to when it comes to taking a position in the market. So in this kind of scenario, when price action breaks down the 1.24100 level, what we want to be doing is to scale down to our lower time frame immediately to look out for confirmation that supports that sellers are gradually gaining some momentum. And if the breakdown happens, you scale down to your lower time frame. I want to see price action retest the 1.24100 level, appearance of selling pressure where buyers find it difficult to break above that structure. Then I want to be part of the move to the downside. It could also go as far as retesting the trend line, or even going as far as retesting, but most importantly, what we want to be seeing is selling pressure where price action transitions into a reversal pattern on our lower time frame, after which we can join that decline to the downside. And there is a caveat to this bearish expectation in this market. As soon as price action continues in our favor, we want to ensure that we move our stop loss accordingly to lock in some profit. Remember, we are sitting on a very strong demand zone at the 1.23600 level, hence it is a little bit risky joining the sell momentum here. But if we want to catch the bearish momentum early, it's advisable we join, but we ensure that we are on standby to move our stop loss accordingly to lock in some profit. Now, as soon as price gets into that demand zone area, what we want to be doing, ensure all positions are locked in, and let's see how price action will react to that structure, and this will decide if we are going to be adding more sell position to our existing trade, that is if price action breaks down that structure, or we are going to be buying if price action continue to find buy pressure above that demand zone. So these are the things we are going to be looking at on the GBPUSD for this week. So I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So let's be on standby to catch this move as we continue to monitor price action going forward. Now, moving on, if you have questions, let me know in the comment section. I'm ready. I'm willing to be of help in that regard. Please let me know right in the comment section if you have any questions. I see you 4087. How are you doing? Sergio, how are you doing today? Zago, good morning to you. 33250, good morning. 4114, trust you are doing well. All right, so in the absence of no questions, let's move on to the next commodity we are going to be looking at, which is the XAUUSD. So going into the daily time frame here, the XAUUSD has been one of our most profitable trade, at least in the last couple of months, as we were part of that bullish move that took us to its the highest point price action had ever been. And if you had been following me on the XAUUSD, you would realize that the structure that you have on your screen right now is what we have been using in the last couple of months. So we have a situation here where price action is bullish, and this is further emphasized with the ascending channel we have here after connecting the series of higher lows and the series of higher highs in this market. And in the last 1 month in this market, we have seen a situation where price action has found some higher highs, hitting new peaks this year. We had the first peak at the $2,000 mark, which is going to be our key level for this week. And we also have the $2,048 area, which happens to be the highest point price action has been for this year. So the highest point price action has been so far on the XAUUSD is the $2,075 level, and at this point in time we are looking at this whole structure. If it's going to lead into a situation where price will climb higher highs to hit the new high, or probably break out of the previous high that we have here. Now, with the whole situation we have here, the $2,000 mark has been a very significant structure in the last 1 month in this market. And in fact, last week's trading session, we saw how this whole situation here was so choppy that buyers and sellers couldn't find an headway at this point. So going into the new week, our center of focus will be around that $2,000 mark, and this will be deciding what our next line of action will be. And in that regard, I was able to identify a simple setup which I think we can use to guide our trading activity for this week. And here we are on the 4 hours time frame. And looking at things from afar here, it is quite obvious that price action has been bullish since the beginning of the month of February. And this is evident after connecting the series of higher lows rather here, giving us this couple of trend line that you can see here. However, since the beginning of this month, we have seen a situation here where price action found higher highs, and at the same time we have higher lows here, as the lowest point in the last 1 month, lowest point for this month is the 1,950 level. This is the lowest point. And then last week we saw our price action found a higher low at the 1,970 zone. So currently price is trading below the $2,000 mark, giving us a clue that sellers are still very strong around this area. So sitting with price action sitting above that 1,970, remember this level was our demand zone for last week, and price action remaining above the structure. Will this turn out to be an opportunity to continue buying the XAUUSD, or are we going to be having the breakdown of the 1,975 to incite a sell-off in this market? So what we are going to be doing now is to scale down to a much lower time frame so that we can see how majority in this market has been reacting to that structure just above that demand zone at the 1,970. Now, right now we are on the 1 hour time frame, and we'll begin to see things more clearly. Now look at what we have here. So we have this whole situation since the beginning of the week, where we have the resistance line for the week sitting at the 1,985 and the support line for the week sitting at the 1,977. So we had this whole chopper situation where price action is indecisive right now, as majority are still testing waters to decide if we are either going bullish or bearish for this week. But one thing for sure is that you all know what we do whenever we have this kind of simple setup like this flat channel. We want to remain patient looking forward to either a breakout of the channel to the upside to give us buying opportunity, or a breakdown of the channel to the downside to give us selling opportunity. But for the fact that price action is sitting on a very strong demand zone at the 1975, I am going to be looking out for buying opportunity unless market structure states otherwise. So with this whole situation, we have here a buy stop order above the 1985 seems more reasonable, where we hope that this demand zone here will continue to be a platform that will incite a second wave of bullish momentum. So let's see how price action plays out here, and rest assured we shall be here tomorrow to review what has happened so far. And to make things a little bit easy for us today so that we can be comfortable in whatever position we have here, what I did was to connect a series of higher lows here, having this temporary bullish trend line at least in the meantime to guide our trading activity. So what this simply means is that if price action continues to trade above this bullish trend line, we feel comfortable in our buy position. So let's wait for price action to break out of the 1985, and buying pressure above that area will be welcoming more opportunity to add more position to our existing trade. So in as much as we're looking out for buying opportunity above the 1985, what do we want to see in this market that will suggest that sellers are gradually coming in? Are we going to wait for the breakdown of the whole of the 1970 before we can sell? Personally, that's more reasonable, as we would need price action to take out all the buy positions here to give us that leverage that sellers are gradually coming in this market. But most of the time, it's not advisable to wait the whole 200-300 pips before we join that move. Most of the time, we have signs that reveals itself behind the scenes that sellers are gradually coming in. So we could actually join even before the breakdown of that support line happens. And what do we want to see on this chart that will make us join that bearish momentum even before the breakdown of that demand zone happens at this point? So for me personally, I would want to see that breakdown of that support line happen. First of all, taking out the buy positions here, which has been amassed at the beginning of the week here. And remember, we are not having a sell stop order, as we still need some confirmation that will give us that leverage that sellers are really strong at this point. And what we are going to be doing as soon as the breakdown of that structure happens is to scale down to a much more lower time frame. It could be your 5, 10 or 15 minutes time frame. Now look out for a retest of structure to happen, giving us that confirmation that sellers are gradually coming in. And this retest of structure could come in the form of a retest of the 1977, or even go as far as this trend line. But most importantly, what we want to see, what pattern we want to see, is selling pressure below both of the structure that will give us a clue that sellers are gradually coming in. Then we could join, risk a little bit of a percentage of your portfolio size on this one, and when a further breakdown of the 1997 happens, then we can go fully in for the sell position. So this is what we shall be looking at on the XAUUSD today. I doubt if a sell momentum will happen. I'm hoping that price action will break out of the 1985 to trigger our buy position, and I'm looking more bullish for this week. But if a breakdown of the 1977 happens, then we will have no choice than to get ready to sell the XAUUSD for today. So if you have questions, let me know right in the comment section. And I'm already out of time right now, but I still think I could take one more pair before we call it a day, so that we can have a wide range of trading opportunity for this week. So with that being said, let's go into the USDJPY, which will be the last instrument that we are going to be monitoring for this week. And here we are on the daily time frame. Now, if you've been with us in the last couple of weeks, remember we had this whole situation figured out, where we acknowledge the fact that the 131.00 level has been a very strong demand zone in this market, which has lasted the span of 10 to 11 months in this market. As every point in time sellers come into the structure, we have been seeing buy pressure negating all their attempts. And following the bearish trend line we have here, we saw the breakout of the trend line happen in February. And from a technical standpoint, whenever price action breaks out of a key structure like this, we expect that one point in time, price will come back, retest that structure to incite the second wave of that bullish momentum. And this is exactly what happened in this market, as we saw right into the later part of last month through the first day of this month. We saw multiple rejection here, where price action transitioned into what looks like a reversal pattern here. And prior to the beginning of last week's trading session, remember, we spotted this potential reversal pattern, and immediately what we did afterwards was to identify the neckline of that reversal pattern, which coincidentally fell at around the 133.800 level. And you all know what we look out for. We want to see a breakout of that structure, which actually happened at the beginning of the week, and we had the privilege of joining this 150 pips move before this bearish momentum happened. And since the breakout happened here, we have been seeing some multiple rejection of that neckline area, giving us a clue that buyers are gradually gaining some momentum here, which might lead into the confirmation of that reversal pattern to incite another wave of bullish momentum. And as you can see here, price is still trading above the neckline, hence it is advisable to look out for buying opportunity at this point. Now, to make things a little bit easier, when we scale down to the lower time, to the 4 hours time frame, this is what I was able to see here, and which will be the basis of our trading activity for this week. Now, look at the structure we have here. Since the beginning of this month rather, we have an ascending channel, which further emphasizes the strength of the buyers in this market. And right now, price respected the support line one more time, and since then we have been seeing buy pressure in this market, and I'm of the opinion that we might be seeing the breakout of the 135.00 level this week to incite a very strong move to the upside. So in order for us to be part of a buy position here, we want to look out for an opportunity that we can position ourselves to take advantage of that move. And to do that, we want to scale down to the 1 hour time frame to see how participants in this market has been reacting to that structure. So with this whole situation here, remember the 133.800, which we identified on the daily time frame, which is the neckline of that reversal pattern we identified, and also this level is serving as our key level for this week. And at the beginning of the week, we saw this whole situation where price action was trapped within a channel between the 134.480 and the 133.900 level. And with this whole situation here, you all know what we look out for whenever we sight a very simple flat channel like this. We want to see price action either break out of the resistant line or break down the support line for trading opportunity. And as a result of this, I had my buy stop order triggered at this point. As you can see, we already have a buy position triggered, and if you are taking advantage of that opportunity right there, well done to you for being on standby. And let's see how far this move is going to go. So stop loss should be somewhere below the previous low here, which will dovetail to about 35 to 40 pips thereabout, which is not bad at this point. But if you had missed out on this opportunity we had here this morning, well, I would advise you to remain patient, as you don't want to jump in front of a moving train. So there are two things you can look forward to if you had missed out on the buy position, and for those who are already in the buy position, we still have the privilege of adding more position so that we can maximize this bullish move if it's going to be what we are going to be seeing this week. So what we are going to be looking forward to at this point is one, since we have a breakout of that resistant line, which happens to be our yardstick for buying opportunity this week, then you all know from a technical standpoint, there is still a chance that price could still come back to do a retest of that structure. So if it so happens that price action comes back to retest the structure, then we want to be part of that move when we start seeing buy pressure around that area. And if price action continues to the upside, breaking out of the 135.00 level, then we will be thinking of adding more position to our existing trade. So that is how we are going to be trading the USDJPY today. And if price action does not come back to retest structure and instead it continues to find higher highs, then you want to be looking out for trend continuation patterns above the structure, like a flag pattern, a triangle, bullish rectangular pattern, whichever case it may be, to be part of that move. And a final breakout of the 135.00 level will be a very massive signal for us to join a trend continuation, as a breakout of that level would have taken out all the sell position around this area to give us a confirmation of the strength of the buyers at this point. So these are my views here on the USDJPY for today, and we are looking forward to more buying opportunities here, and let's look out for more opportunities above that 134.480. But if at any point in time price action breaks back below the neckline that we identified on the daily time frame at the 133.800 area, then at this point we will be looking out for selling opportunities to join a bearish move to the downside, and this would have negated that reversal pattern we identified on the daily time frame. So these are my views here. I doubt if a bearish momentum will happen. I'm still holding on to a bullish pattern, bullish momentum here, but if it happens, let's be on standby to catch that move. So on this note, I want to call it a day here. It has been a wonderful moment with you guys, and I hope I was able to simulate all the potential trading opportunity that we could come across on all the financial instruments that we are going to be monitoring for this week. At this point, I'm very sure you are well equipped to be able to take advantage of any potential trading opportunity during the New York session. So we shall be coming back again here tomorrow to review how well these pairs have been doing, and then prepare ourselves on how to take advantage of more opportunities during the New York session tomorrow. Manage our trades too as well. And for those who are joining us for the first time, I hope you are able to take one of two things into the New York session today, and let's see how things worked out. So let's see again tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs have been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.